This is private equity explained in 1 minute. Don't scroll away, it's really not that bad. What is due diligence and why do you need it in private equity? I learn best with analogies, so here we go. Imagine you're buying a used car. You wouldn't just hand over the cash because the car looks good on the outside, right? You check under the hoods, test the brakes. In private equity, due diligence is exactly that process. But for companies, this is gonna be a strong one. When PE firms are thinking about investing or buying a company, they dive deep into something called a data room. This is a secure online space where the company has to share their records. Like for a car, you want to know its accident history, service records, and maybe even the owner's manual. Here are some things you would analyze in a private equity data room. 1, financials. Are the revenues real? Is the business profitable? 2, operations. How does the company actually run? 3, market potential. Is the industry growing? Who are the competitors? 4, legal risks. Are there lawsuits lurking in the background? When you're buying something used or with previous ownership, you want to make sure you're not buying something with surprise baggage. But due diligence isn't about just finding out what's wrong with the company. It's making sure that the company can deliver on its potential. Due diligence is the ultimate trust but verify. Follow me for more business breakdowns.
Here are my favorite apps as a financially responsible 24-year-old with 70k in savings. Starting off with Invest Engine, this is where I have one of my stocks and shares ISAs. Invest Engine and Trading 212, in my opinion, are the best investing apps for 2025. I then have Trading 212, which is where I keep most of my investments. We then have Chase, which is my favourite bank to use. I get 1% cash back on all my spending. Next we have Hargreaves Lansdown, this is where I keep my lifetime ISA. Similarly with my stocks and shares ISA, I just invest in low-cost, broad market index funds. I then have Snoop, which is where I track all of my spending, and you can link multiple bank accounts so that you can see your spending across all your different accounts. I do have premium bonds, but I actually recently took them out and put them in Trading 212 just because I felt like I wasn't getting a high enough return. I also have the People's Pension. This is where my workplace pension is kept. I have HMRC in case I want to check my tax code, see if there's any issues, and also submit a self-assessment. Those are the top ones that I use. Let me know in the comments below if you have any favourites. If you enjoyed this video, give it a like and follow for more personal finance and investing content from me.
Called the 50-20-30 rule. 50% or less of your $1,000 that you make after taxes, so the money that actually hits your bank account, should go to your essentials. That's the roof over your head, electricity bill, grocery bill, and it's your transportation to and from work. You could live off that alone. 20% or more goes to the future. That's savings. That goes into your 401k. That goes into your emergency savings. 30% or less is your lifestyle, shopping, going out to eat, and that is living within your means.
I created the perfect solution to track your net worth. I'm personally not the biggest fan of entering my bank passwords into third-party net worth apps, so this spreadsheet is a great alternative. When you first start with the sheet, you can enter in your net worth goal in the green box above, and as you enter your assets and liabilities every single month, you can see your net worth progress in this top tracking bar. If you also have debt, this is a great way to keep track of the progress of your loan balances. There are other charts that track your progress, so for example, this is a current asset distribution. So this takes the data from the current month that you're in.
How to analyze a balance sheet by Brian Feroldi. Ask these questions. First, how much cash does the company have? Second, are there any accounts receivables and how much? Third, are there any inventory and how much? Fourth, is there any goodwill? How much? Fifth, what is the company's biggest asset? Sixth, does the company have any debt, short or long term? Seven, does the company have any deferred revenue, which would be a good thing? Next, what would be the company's biggest liability? Next, how has the company funded itself, with liabilities or with equity? Next, is there any preferred stock that the company has, which would be a bad thing? Next, is there any retained earnings, and is this number positive? And then finally, is there any treasury stock? Has the company been buying back its stock? If this type of information is useful, follow me for more.
What are the different skills you need to have as a financial analyst? I'm going to be breaking that down in this video in 3 different segments. So the first segment is financial modeling and forecasting skills. We do a lot of our work in Excel, so proficiency in Excel is very beneficial. Just to name some of the basics, you're going to need to know how to use VLOOKUP, XLOOKUP, SUMIFS, index match, pivot tables. There's a lot you need to know in Excel. You also need to be proficient in financial forecasting, which is the ability to project future financials in a short period or a long period of time. There are a lot of different ways to create a forecast, such as qualitative methods, quantitative, scenario planning, rolling forecast. It really just depends on the business and what they use. And lastly, for this segment, you're going to need to know how to create budget and scenario analyses. So this skill is where you project financial outcomes based on different assumptions, and those assumptions are created through financial models. Moving on to the second segment, you're going to need to understand the financial statements. You're going to need to be able to read and interpret the three main financial statements, such as the balance sheet, the income statement, and the cash flow statement. You need to be familiar with all three to get a better grasp of how transactions are flowing through their different financial statements. This makes for better analysis later down the line. Whatever financial statement you focus on, you're going to have to do what's called a variance analysis. So that's where you take what actualized and you compare it to the forecast, and the result is a variance. So you analyze that variance column and you see what's favorable or what's unfavorable. And for this last segment, I'm going to call it data analysis just because there's a lot of different things that can go into this. You're going to have to understand how financial metrics work, such as ROI, EBITDA, gross margin, and working capital. You need to know how to calculate them just because you're going to have to interpret them later down the line. Understanding that skill falls under this next skill, which is creating and tracking KPIs and putting them on dashboards. KPI stands for key performance indicators, and you can kind of think of a KPI dashboard as a snapshot of how those metrics are doing. And the last skill you need to know is how to use business intelligence tools. I personally use Power BI at work, but I know some other financial analysts that use Tableau. So where can you learn all these different financial analyst skills? There are different courses you can take through the Corporate Finance Institute. I personally recommend their FMBA certification. It gives in-depth training to the skills that I mentioned. So their platform provides you quizzes, video lessons, case studies, as well as interactive exercises. It's really beneficial in teaching you the skills you need to know as a financial analyst. I have the link in my bio if you want to learn more. So it doesn't matter if you're a full-time student or you're working full-time. Their schedule is completely flexible, so you can learn on your own time. Let's be honest, college teaches you the basics, but it doesn't really tell you how to work in finance or banking. So I'm going to tell y'all how CFI equipped me to become a financial analyst. CFI stands for Corporate Finance Institute, and they are the #1 online provider of finance and banking training, certifications, and productivity tools. Even if you're a beginner or pro in the finance banking industry, they give you the resources you need to succeed in your position. They have industry-recognized certifications that are used to showcase necessary skills to employers. So if you're wondering how can I become a financial analyst, a business analyst, if I have no prior experience, this is what I always recommend because these certifications are globally recognized. I personally like it because their courses have real-world application. So it's not a maybe you'll use this, you're definitely going to use what you learn through CFI in the finance and banking industry. And if you have a busy schedule, that's completely fine because their courses are designed to learn on your own time. And if you're struggling to stand out on job applications, getting certified through CFI is going to help you stand out against your peers. And even if you already work somewhere, it can help you get a promotion later down the line. Unlike other training platforms, CFI's content is regularly updated to reflect trends and practices. And the content is really easy to learn because of the instructors. They're actually industry experts, so they have the inside scoop on what you need to know to succeed in your position. Their courses are packed with templates, guides, calculators, case studies, and interactive exercises, which is beneficial because you can take what you learned through the course and apply it at work the next day. That's something that I did, and it helped me get promoted from staff accountant to financial analyst. I highly encourage you to check out CFI. I have the link in my bio if you want to learn more.
What's the difference between a budget and a forecast by Brian Feroldi? A budget is a financial plan that outlines revenue expectations, expenses, and goals for a specific period, usually a year. A budget sets financial targets and provides a baseline for resource allocations and performance expectations. A budget is relatively fixed once it's approved, and it's used as a performance benchmark. It's only revised if major events occur. Budgets are highly detailed with line-by-line specificity, and teams are held accountable to meet their targets. A forecast is a rolling estimate of future performance, and it's adjusted periodically based on actual results. Forecasts reflect up-to-date insights on outcomes and are used for proactive decision-making. Forecasts are often shorter-term in nature, like monthly, quarterly, and they are rolled forward. Forecasts have a lot of flexibility to them, and they can change frequently based on new information. Forecasts are high-level, so they're not very detailed, and they're used for iterative adjustments rather than strict accountability measures. If visual explanations like this are useful, follow me for more.
This is how you're going to allow budget in 2024 because this year we're prioritizing our financial health. If you're new here, my name is Lillian and I help uplevel your career and finances, so if that interests you, then drop a follow. First is to stop impulse spending, because especially as Americans, we tend to buy a lot of unnecessary things. What I always do is if I want something, I wait 2 days before making the purchase, and if I still want the item after several days of thinking about it, then I justify it. The second thing to do is to automate your savings. A lot of people don't know about this, but you can go into your direct deposit settings of your company and change the settings so you can direct your paychecks to both your checking account and your savings account. This helps resist the temptation of dipping into your savings to spend it. And now you don't even have to think about it. Lastly, prioritize spending money on areas you enjoy and cutting back on things you don't enjoy as much. Whether if it's eating out, buying luxury goods, or traveling, it is okay to spend your hard-earned money on anything you want, but there is this saying, you can do anything, but not everything.
I make $70,000 a year with no degree at 26 years old, and I will tell you how. I work in finance, okay? I work for a brokerage firm. If you're like me and just college wasn't your thing, you gave it a try and it's just not your thing, consider getting into finance. You do not need a degree. The way to get into finance, you want to start off with the SIE exam, which is the very basic exam that you need to get into the finance industry, okay? SIE exam stands for Securities Industry Essential Exam, the most basic exam to get into finance and start working with the stock market, with investments, with mutual funds, bonds, all that. If you're new to the industry, it's okay. You can learn it, okay? I know someone that was like a firefighter and transitioned into finance with no knowledge. It is possible. You can learn. Just get the study material. The SIE exam, you can take it on your own. It's like $100, I think. And yeah, once you have that license, you can start applying to the big brokerage firms. For example, Charles Schwab, Merrill Lynch, Morgan Stanley, Vanguard, Bank of America, Chase, the big banks working on their investment side. Once you have that SIE exam, these people will consider you. Once you get your foot into the door, and you get hired by one of those firms, they can sponsor you for more exams and you have more certifications under your belt, but it's definitely recommendable. I love the industry, very beneficial, because you can also learn investment knowledge for yourself, which is awesome. So what I do is I am pretty much an assistant for a group of financial advisors. A lot of administrational work, but you do need to have those licenses. For a position like mine, highly recommend. All right, I gotta go. I'm off work already, but follow me for more tips.